We're here at the Toronto Venture Forum at the Trump International Hotel and Tower in Toronto with John Marshall, the CEO of the Ontario Capital Growth Corporation. John, could you tell me a little bit more about what do you think about co-investment between Ontario, Quebec, and New England?
Yeah, no, I think that it's a great forum. As I said this morning, it's great to be able to facilitate this event at OCGC. We've done a number of deals. We've closed 24 deals to date. We've got about 26 qualified investors. Those investors are Quebec-based funds like Roe out of Quebec. We've got Boston-based VCs like Charlie and Grand Banks. We've done deals in U.S. corporates, U.S. VCs like D.E. Shaw, Delphi, OrbiMed, and others.
Those are direct investment, or
those are direct.
Okay.
Yeah. So we've closed 3 angel deals, and done direct deals alongside angels. So I think that what you're trying to accomplish here today very much aligns with what OCGC was actually designed to do as a direct investor in Ontario-based companies.
Oh, great. And is there one deal in particular that you could maybe give an example of what you think a best practice
Maybe just we did a deal in a company called Tello IP.
Okay.
The one lead investor. So we look at an investor's investing, operating, and exiting experience. We just don't want someone who's super rich, who doesn't provide value to the company, because we're an observer on the board. We have the same information and shareholder rights, but we're not the one who's helped driving the business strategy of the company. So the investor was a former VP of AT&T. And he came in as an angel, where he was able to provide that function for OCGC, and became a very important member of the syndicate. So important that for about 6 months he became the CEO of the company.
Wow.
And they needed that support, right? They needed that strategic vision of where this company was going. The angel played that role. Subsequently, he steps off the board, and now the company is growing, and we're probably going to do another follow-on financing in that company next little while. Another company, Natrix Separation out of Burlington. It's a Burlington-based company. It's a VC deal. The lead investor was a U.S.-based investor out of Menlo Park. And the interesting thing about that, and I said that to him, I said, so you're up here living in Burlington for 2 weeks a month, and he said, no, John, the value of this company is so great that it's going to, if it does what I think it's going to do, and I'm risking my time away from my family, that I'm going to spend 2 weeks a month here in Burlington, and that company is going to do well. So Randy played that role. He knew that lead role, and he went and helped recruited a CEO to take over, and he stepped back a bit, but he played that kind of catalytic role of making sure that we had a strong investment syndicate.
So to overcome the geographical barrier, you find for somebody to lead the deal that's got the experience and that can be there with the company to help them achieve the strategic goals, right?
Yeah. So we're a co-investor. Right. So we're not deal hunters, like the gentleman from Quebec was saying.
Exactly.
We actually allow others to find the deals, to lead the term sheet, to negotiate the terms, and then we come in and close that deal. So the good news is you don't have someone in the government, interfering in the term sheet and the natural organic debate that goes on with what's going to make this deal happen and what the company needs. But we're there with the capital, and we can close those investments quickly.
So it's investors who brings you the deals?
That's right. Okay. That's right. So we're not out there on the street walking the tech transfer offices of the universities. We're relying on the angel or the VC or the U.S. corporate to actually source the deal.
All they put money themselves, and
they
then
put money themselves.
Looking for a co-investor,
and we're
come to see you.
That's right.
Okay.
Yeah. So that's why, we've been doing a deal a month. We've been closing a deal a month. And the reason we've been doing that is that we get deals that are fairly well formulated and thought through and negotiated. And then we come.
Is there as well.
And the due diligence is there. We have our own independent due diligence firm, Covington Capital, who's a service provider to us. Right. And they make a recommendation to us. They look at the due diligence, but they don't do it. We allow the investment syndicate to bring the due diligence to us, and then we're able to close those deals rapidly.
Perfect. And for a final word, any suggestion or way that we can help to build this golden triangle?
Well, I think that really, we've been doing a lot. Like I mentioned the story about bio, where we actually, work together with Ontario, Quebec. I think that we need to make sure that people are aware of the investment opportunities in Ontario and Quebec to work with, global markets, whether those investors are in Boston or the Valley or in Israel. We did a deal with an Israeli VC fund.
Yeah.
I own shares in a Delaware Corp where all the investors came through a U.S. structure. So it doesn't really matter where the money comes from. I think we need to actually look at what are the great technology companies that we have and then figure out how we build linkages to those investment syndicates.
Great. Well, thank you very much, John.
Okay, thanks so much.
Thanks for being here.
Okay, don't do it.